In a world dominated by algorithms and complex financial models, it's easy to forget that ancient wisdom can still hold valuable insights. The Yi Jing, an ancient Chinese divination text, offers a unique perspective on market trends and economic cycles. One particular hexagram, known as Jì Jì, has caught the attention of market analysts and investors alike. Jì Jì speaks of completion and harmony, but also warns of the fleeting nature of perfection. Imagine a market at its peak. Stocks are soaring, investors are optimistic, and the economy seems unstoppable. This is the essence of Jì Jì, a moment of apparent triumph, but also a time for caution. Just as the I Ching teaches that every yin contains the seed of yang, every market peak carries within it the potential for decline. By understanding the principles of Jì Jì, investors can navigate the markets with a greater sense of balance and foresight. Market predictions are both enticing and elusive. Investors are constantly seeking an edge, a way to anticipate the next big move and capitalize on emerging trends. While no one can predict the future with absolute certainty, the Yi Jing offers a unique approach to understanding the ebb and flow of market forces. Jì Jì, in particular, highlights the importance of recognizing patterns and cycles. Just as day turns to night and seasons change, markets experience periods of growth, consolidation, and correction. By studying historical trends and understanding the cyclical nature of economic events, investors can gain valuable insights into potential market movements. The Yi Jing doesn't offer concrete predictions, but rather a framework for understanding change and making informed decisions. It encourages a mindset of balance, urging investors to temper exuberance with caution and to recognize that every market peak eventually gives way to a period of decline. By embracing this ancient wisdom, we can navigate the uncertainties of the financial world with greater awareness and preparedness. Imagine a grand tapestry woven with threads of ancient wisdom. That's the Yi Jing. Within this intricate tapestry lies Jì Jì, the 63rd hexagram, a symbol rich with meaning and layered with interpretations. To truly grasp its significance in the context of market predictions, we must first embark on a journey to decode its symbolism. Jì Jì, often translated as after completion, speaks of a state of fulfillment, a sense of things being in their rightful place. Picture a puzzle perfectly assembled, every piece fitting seamlessly into the next. This image of wholeness and order represents the essence of Jì Jì. It signifies a time when efforts have borne fruit, goals have been reached, and a sense of harmony prevails. Yet, like the calm after a storm, Jì Jì carries within it a subtle undercurrent of anticipation, a recognition that this state of completion is not a static endpoint, but rather a transition point. Understanding Jì Jì requires looking beyond its surface interpretation of completion. Jì Jì is composed of two trigrams, Li representing fire above, and Kan representing water below. This pairing, fire above water, might seem paradoxical at first glance. Fire, with its upward-reaching flames, symbolizes passion, energy, and expansion. Water, on the other hand, with its downward flow, embodies calmness, adaptability, and introspection. How can these seemingly opposite forces coexist in harmony? Jì Jì offers a profound lesson in balance. The image of fire above water illustrates a delicate equilibrium. The fire's heat causes the water to evaporate, rising as steam and nourishing the heavens. This interplay of fire and water mirrors the dynamics of the market. From ancient symbolism to modern markets, a timeless connection. At first glance, the ancient wisdom of the Yi Jing might seem worlds apart from the complexities of modern financial markets. However, upon closer examination, we discover a timeless connection, a thread that links ancient insights to contemporary challenges. Gigi, with its emphasis on completion, balance, and the cyclical nature of events, offers a valuable framework for understanding market dynamics. Imagine a market experiencing a period of sustained growth. Investors are optimistic, fueled by positive economic indicators and strong corporate earnings. This exuberance, while initially driving further growth, can create a sense of complacency, a belief that the upward trend will continue indefinitely. This is where Gigi's message of caution comes into play. Gigi encourages us to recognize that market cycles are inevitable, that periods of expansion are often followed by periods of contraction. Gigi in action, deciphering current market signals. The financial world is abuzz with chatter about interest rate cuts, inflation figures, and geopolitical tremors. It's a whirlwind of data points, expert opinions, and speculative forecasts. But amidst this noise, Gigi's message of balance and cyclical change provides a grounding perspective. Let's examine how this ancient wisdom can help us decode the current market signals. The recent rebound in gold prices, for instance, has sparked debates among analysts. Some view it as a safe haven rally driven by fears of a global economic slowdown. Others interpret it as a technical bounce, fueled by short covering and a weakening US dollar. Gigi reminds us to look beyond the surface fluctuations and consider the underlying dynamics. Navigating the labyrinth geopolitical tensions and market volatility. The global landscape is rarely calm. Trade wars, political upheavals, and geopolitical maneuvering add layers of complexity to an already intricate financial system. These events, often unpredictable and swift in their impact, can send shockwaves through the markets, testing the mettle of even the most seasoned investors. The recent pact between Russia and North Korea, for instance, has raised eyebrows and sparked concerns about a potential realignment of global power dynamics. Such shifts, while seemingly distant from the realm of finance, can have profound implications for market sentiment, investment flows, and the performance of specific sectors. Gigi reminds us that seemingly disparate events are often interconnected, part of a larger web of cause and effect. In times of heightened geopolitical uncertainty, Gigi's message of adaptability and preparedness rings particularly true. It encourages investors to diversify their portfolios, to avoid putting all their eggs in one basket, and to consider hedging strategies that can mitigate losses in the event of unexpected market swings. In a world awash with financial data, expert opinions, and conflicting market signals, Gigi provides a compass, guiding investors towards a balanced and insightful approach. Its message, rooted in ancient wisdom, transcends the noise and offers timeless principles for navigating the complexities of modern markets. One of Gigi's key teachings is the importance of recognizing cycles. Just as seasons change and day turns to night, markets experience periods of growth, consolidation, and correction. By understanding that these fluctuations are a natural part of the economic ecosystem, investors can avoid making impulsive decisions based on fear or greed. Gigi also emphasizes the significance of balance. In a market context, this translates to finding the equilibrium between risk and reward, between optimism and caution, and between following the herd and trusting one's own judgment. It's about building a portfolio that aligns with one's risk tolerance, time horizon, and financial goals. Perhaps Gigi's most enduring lesson is the need for adaptability. The Federal Reserve, the most powerful economic institution, walks a tightrope, balancing a system prone to booms and busts. Every move, interest rate adjustments, inflation pronouncements, is scrutinized by investors, eager to decipher signals and anticipate the next big move. This balancing act resonates with Gigi principles. Like fire and water, the Fed navigates between stimulus and restraint. Too much stimulus can ignite inflation, while too much restraint can stifle growth. The Fed's challenge is finding the sweet spot for sustainable growth. History, as the saying goes, doesn't repeat itself, but it often rhymes. This is particularly true in the realm of finance, where market cycles driven by human emotions and behavioral patterns tend to echo patterns of the past. Examining the Fed's historical decisions, its responses to past crises and periods of economic expansion, can offer valuable insights into its current thinking and potential future actions. The Fed's aggressive response to the 2008 financial crisis, for instance, provides a case study in both the power and the perils of intervention. By slashing interest rates to near zero and injecting trillions of dollars into the financial system, the Fed averted a complete meltdown. However, these extraordinary measures also had unintended consequences, such as inflating asset bubbles and exacerbating wealth inequality. Similarly, the Fed's gradual tightening of monetary policy in the years following the crisis, while intended to prevent runaway inflation, also contributed to a slowdown in economic growth. These examples illustrate the complex interplay of factors that the Fed must consider: the delicate balance between short-term fixes and long-term consequences. Gigi, with its focus on the interconnectedness of events, encourages us to view the Fed's decisions not in isolation, but rather as part of a larger historical narrative. Deciphering the Fed's next move, the financial markets hang on the Fed's every word, passing speeches and press releases for clues about monetary policy. Will the Fed cut interest rates to stimulate the economy, risking inflation? Or will it maintain its course, prioritizing price stability? Recent market volatility has heightened the stakes. Investors look to the Fed for guidance, navigating through stormy seas. Gigi's wisdom in a multipolar world. Gone are the days of a unipolar world. We now navigate a multipolar landscape with diffuse power and fluid alliances. Gigi offers a framework for understanding this new world order. The global stage is now a dynamic interplay of nations. The rise of China has upended the economic order. Transition periods lead to new innovations and opportunities. Managing risk in a Gigi market strategies for balance and resilience. Gigi provides a framework for understanding and managing risk. Diversification is key, like a farmer planting various crops. This cushions against market downturns and reduces volatility. Balance ensures no single event derails long-term goals. Position sizing is crucial, balancing opportunities and risks. Section 3, Stop-Loss Orders, a Gigi-inspired approach to protecting profits. Emotions like fear and greed can cloud judgment, leading to impulsive decisions and losses. Gigi encourages a disciplined approach, relying on predetermined rules. One such tool is the stop-loss order. It's a predetermined order to sell a security at a certain price, designed to limit losses and remove emotion from decisions. Stop-loss orders act as a safety net, protecting profits in a volatile market. Section 1. Technical Analysis. Charting the path of Gigi. The Yi Jing offers insights into the cyclical nature of events and balance. Technical analysis studies past market data to identify patterns and trends. It's about reading the language of the charts, deciphering supply and demand. Analysts map the markets, identifying key support and resistance levels. These tools can complement and enhance Gigi's insights. Imagine a market in a sustained uptrend, reflecting optimism. Technical analysis can signal potential reversals or corrections, recognizing lower highs or a break below a trend line. These signals provide clues about market sentiment shifts. They translate Gigi principles into actionable insights for investors. Section 2. Predictive Indicators, Whispers of Change in the Gigi Cycle. Just as ancient civilizations looked to the stars for signs of change, modern investors rely on a constellation of predictive indicators to gauge the health of the economy and anticipate potential market shifts. These indicators, ranging from macroeconomic data points to sentiment surveys, provide a glimpse into the underlying forces that shape market trends. The Consumer Price Index, or CPI, for instance, tracks the cost of a basket of goods and services, providing a measure of inflation. A sudden spike in the CPI, like a gust of wind disturbing a calm lake, can signal an overheating economy and trigger a shift in central bank policy. Similarly, the Purchasing Managers Index, or PMI, a survey of manufacturing executives, offers insights into the health of the industrial sector. A decline in the PMI, particularly if sustained over several months, can foreshadow a broader economic slowdown. These indicators, while not perfect predictors of future market behavior, offer valuable clues about potential turning points in the economic cycle. They provide a quantitative framework for understanding the ebb and flow of economic activity, complementing the qualitative insights offered by Gigi's cyclical perspective. Blending ancient wisdom with modern tools, a holistic approach to market analysis. Gigi offers a bridge between data-driven analysis and intuitive insights. Markets are driven by human emotions and measurable data. Blending Gigi wisdom with modern tools offers a nuanced market understanding. Gigi encourages embracing both the art and science of investing. Navigating the future with ancient wisdom. The Jì Jì Hexagram teaches us the importance of balance. Financial markets thrive when risk and caution coexist in equilibrium. Extraordinary growth often carries the seeds of its own undoing. Unchecked market exuberance can lead to bubbles. It's about preparedness and adapting to changing circumstances. Volatility is an inherent part of the financial landscape. Integrate timeless wisdom with modern tools to enhance our understanding of market dynamics. Embracing balance, embracing change. The Jì Jì Hexagram reminds us that change is the only constant in the markets. Market cycles unfold, each phase leading to the next, in an ongoing dance of growth and renewal. The key lies in adaptability, embracing uncertainty, and adjusting one's course as needed. Gigi encourages us to view market fluctuations as opportunities for growth and learning. Let us carry Gigi's message of balance, adaptability, and interconnectedness.